Today we're running zombies, but we're also talking about something that in real life is way more powerful than a perk machine on this math. The Roth IRA is truly a financial cheat code, and here's why. Again, like I talked about, we're talking about the Roth IRA. I'm 24 years old. I've had a Roth IRA for roughly about 4 years now, and I've maxed it out every single year. And right now, it's sitting at about $54,000. And I'm not saying that to flex. I'm saying that because you need to understand something. The Roth IRA is one of the biggest financial cheat codes available to young people in America, but most people just don't use it or they don't understand it, and most people delay it. So let's break it down completely. What a Roth IRA actually is. First, the definition. A Roth IRA stands for a Roth Individual Retirement Arrangement. It's not an investment itself. It's an account, a container that holds investments. That distinction matters. Inside a Roth IRA, you can buy index funds, ETFs, mutual funds, individual stocks, and even bonds. But what makes it special is how it's taxed. With a traditional IRA or a 401k, you get a tax break today and pay taxes later when you withdraw. Now, with the Roth IRA, it's completely opposite. You contribute money that's already been taxed. You don't get a deduction now, but from that point forward, all that growth within inside that account is tax free. And when you withdraw in retirement, you pay zero federal taxes on the gains you have on the investments you made within the Roth IRA. It's not tax deferred, it's tax free. That is an enormous difference over 30 to 40 years. Individuals like myself who are in their 20s have a lot of time. Time is on our hands. Now, why is this so powerful at my age, 24? Time is my greatest asset, not income. If someone is 45 and they're just starting, they maybe have 15 to 20 years of compounding. At 24, shoot, I have 35, 40 years. Compounding is exponential for me. That means, yeah, I have a slow start, but then the acceleration in the compound dramatically increases. Breaking it down practically, the maximum contribution right now for someone under 50 is 7,500 per year for the year of 2026. And 2025, it was $7,000. That's roughly about $583 per month. If you invest $7,000 per year from 24 to 60 and average roughly 8% returns annually, you're looking at well over 1.2 million. And remember, that 1.2 million is tax free. You don't owe the IRS on withdrawals. That is insane leverage. And that's why I call it the cheat code. I started it when I was 20, maxed it every year. I believe the limit was $6,000 at first, and now it's 7,500. But yeah, I'm currently sitting around $54,000 in the account. And here's why that's crazy. Even if I stop contributing today, which I won't, but even if I did, at 8% growth, that $54,000 alone could turn into roughly $900,000 by retirement from what I've already built. That's compounding. That math's working for you instead of against you. My money's being put to work instead of just sitting in a bank account. Now, how do you actually use a Roth IRA? This is where people get confused. You don't just put the money in and let it sit as cash. You have to invest when you put this money in. When you contribute to a Roth IRA, the money initially sits as cash inside the account, but you must manually invest it. For example, you might choose a broad market index fund tracking the S&P 500. For me personally, I know I have roughly 70% of holdings in FXAIX within Fidelity. Or you might choose a total US market fund or a NASDAQ heavy fund. The idea isn't gambling, the idea is long term equity exposure. You are buying ownership in productive companies and you're holding them for decades. No day trading, no emotional selling. as the markets decrease and there's no panic. The Roth IRA rewards patience. Now, let's get technical. To contribute to a Roth IRA, you must have an earned income. That means wages, salary, or self employment income. And there are income limits. If you make too much money, your ability to contribute phases out. For most people in their 20s and early 30s, normally this isn't a problem. But it's important to know you can only contribute up to the annual max. I believe if you're under 50, this is 7,500 for the year of 2026, and then $7,000 for the year 2025. You cannot dump $50,000 in this account in 1 year. The power truly comes from consistency and not dumping that money. Now, with the withdrawal structure, there's another major benefit. You can withdraw your contributions at any point in time, tax free and penalty free. However, you can't withdraw the gains, the contributions. If over 4 years I contributed, let's say $28,000, I could pull that $28,000 out. Why? Because it was already tax money that I put into the account. But the earnings, the growth, are protected all the way up until age 59 and a half to remain tax free. There's also something called the 5-year rule, basically stating your first Roth IRA contribution starts a 5-year clock. After 5 years and after age 59 and a half, all the withdrawals of the earnings are tax free. There are limited exceptions like first time home purchase, up to $10,000 of earnings, disability, and then there's certain hardship situations in regards to the Roth IRA account. But again, this is not a short term account. This is a long term strategic capital. Now, why most people ignore it? Let's be honest. $583 per month doesn't feel exciting. And shoot, at my age at 20, the last thing I want to do is put money towards an account. I don't realize the totality of the circumstances and how much of a benefit at my age contributing to this account really has. But when you run the numbers, it's extraordinary. It doesn't give dopamine contributing $583 per month. It doesn't buy you a new truck, a brand new 2026 Ram 1500 or 2026 Toyota Tundra, and it doesn't upgrade your apartment. It doesn't flex on the Instagram. But what does it actually do? It builds tax free wealth silently. Most people choose visible status over invisible wealth. They finance liabilities. They delay investing. They think they'll start later. But later costs you time, time that you can't get back. And time is the variable you cannot recover. Now, here's kind of a strategic insight. Most 24-year-olds are in a lower tax bracket than they will be in their 40s or 50s. So paying taxes now at a lower rate and locking in tax-free growth forever, that's tax arbitrage. You're choosing to pay tax while rates are low and income is lower. Then you're making serious money later in life. Your withdrawal tax-free, right? That's intelligently positioning yourself to be the most economically sound. The snowball effect. The first $50,000 honestly truly feels super slow. The first $100,000 feels slow. But then something happens. Growth starts generating more growth than your actual contributions. At 8%, 8% returns on $100,000 generates $8,000 per year on its own without having to touch it at all. That's more than the annual contribution limit. Even the my eventually the account grows more from compounding than from what you add. That's when the cheat code really activates. Now, how does this fit into financial independence? The Roth IRA is not your only tool. It's just one of the many foundational tools you can utilize. Now, you layer it with a brokerage account, real estate, your business income, retirement plans like a 401k. That's when you reach financial independence. Now, in retirement planning, having tax diversification matters. Taxable accounts, whether it's tax deferred accounts, tax free accounts, the Roth IRA is a tax free weapon. Long term, I'm 24 with $54,000 invested. If I stay disciplined and max it for the next 10 to 15 years, the compounding curve accelerates dramatically. The difference between starting at 24 and starting at 30 is hundreds of thousands of dollars. 6 years can cost me six figures. That's real. Think about zombies. Early rounds feel slow. You're scraping points, boarding windows, building slowly. Mid rounds, you got some perks, you got some positioning, you got some rhythm. Now, late rounds, that's when the scaling gets wild. Money works the same way. Early investing feels boring, mid game is discipline, and late game is dominance. The Roth IRA is that early game foundation that lets you survive late game pressure. If you're in your 20s, open a Roth IRA if you're able to. Automate contributions, invest consistently, ignore the hype, let time work. The Roth IRA is not flashy, but is one of the most mathematically powerful wealth building tools available. And if you master it early, you give yourself optionality. You give yourself leverage. You give yourself freedom, and that's why it's a cheat code. And most people won't use it, but you will. I'll see you in the next one.